Having great execution is one of the biggest factors in being a successful day trader and scalper. The biggest emotional factor that holds us back from this is fear. Today we're going to overcome that. What's up, you guys? It's Keith from Stock Hours here, back again with another educational video. Today we're going to be talking about one of the biggest emotional problems that traders have, which is fear. Why is fear a bad thing in the markets, and how are we going to overcome this? As a beginner trader, I know everything can be very intimidating, but sometimes that intimidation is going to hold you back from doing the things that you know you need to do, such as taking your first trade or hitting your first stop loss. I know these are scary things, coming from somebody who obviously had to start at the beginner point. Fear was one of my biggest problems when I very first started trading, and that caused me to miss out on so many great opportunities. Now, there's three things we're gonna need in order to overcome this fear. The first one being a plan. You need to have a good, solid plan when you come into the trading day so you don't let any emotional factors distract you. If you've put in the time and the due diligence, you will have your levels planned before the market is even open. And all you need to do when market is opened is be there to press the button. If it wasn't for having a good plan, I would probably still have fear executing some of my trades, even though I've been doing this for so long. If I go into a trade without a plan, essentially all I'm doing is gambling, which one of the biggest factors of gambling is also fear. So what do we need to do to create this plan? First of all, we're gonna need to know how to chart. And if you don't know how to chart, make sure you check out some of our videos in the educational playlist, and also check out some of the live charting sessions that we have on this channel. After you know how to chart, you need to write down the exact levels that you're planning to enter and the exact levels that you're planning to exit. If you can find a target, then that is perfect. But if not, just stick to targeting momentum. If you're also having troubles finding a stop loss, if you're a complete beginner, we would recommend sticking to a baseline 10% max stop loss. Once you get a bit more educated and have a bit of a better understanding on how to read price action and how to actually chart and find these levels, then we could say base your stop loss off of price action and the chart. This is technically going to be the best and most consistent way to trade, but not everybody can pick that up right off the bat. When you have your entries and exits pre-planned, then all you have to do is just be there to execute. And if you execute properly, you should have no fear in the trades. The next thing we're gonna go into is sizing. If you are sized in too heavy in your trades, no matter how good your plan is, you're always going to have fear. And a lot of the time, the fear is going to shake you out of these trades, even if the trade is playing out in your favor. Now, trust me, I've been there before where I have been in way too heavy for my knowledge level and for my account size. And this is not a position you wanna be in. Make sure you are sizing at a smart amount for your account, and not even just your account, but also your personal finances as a whole. If you have $25,000 in your account, but you only have $25,000 to your name, you obviously shouldn't be taking $10,000, $15,000, $20,000 position sizes. So even if you have a large account, that doesn't mean that you need to be taking a large position size. Now, on the other hand, if you have a $25,000 account and you have $500,000 in your bank, then you can probably afford to go ahead and take some larger position sizes. The size that I would recommend for most beginners is, I would say, start out with a $5,000 account maximum, because you're going to make beginner mistakes and you don't want to do this with a large sum of money. It's going to save you a lot of money and a lot of headache if you just do it this way. Beginner traders have asked me before, hey, I have a $25,000 account, what position sizes should I be taking? And my answer is, if you don't know what position sizing you should be taking and you have that large of an account, it probably means the first move you need to do is take $20,000 out of that account and then start from there. This is going to prevent you from making some of these big beginner mistakes, such as averaging down in your losing trades and not following your stop losses, etc. This is going to save you from a lot of that fear when it comes to losing money. The third and final thing you've got to do to get rid of this fear is make sure you have a journal. If you have a journal and you're writing down what happened in each trade and why you took these trades, how you felt during each trade, it's going to help you understand yourself a lot better. This is going to show you which setups you perform best on, which market conditions you perform best in, and what you need to do to fix some of your problems. When you have your baseline plan, you have your correct position sizing, you have your journal that's telling you how to fix all of your problems, this is where the fear is going to go straight out the window. If you guys need help setting up a journal, make sure you DM me or DM somebody from the Stock Hours team, and we will be more than happy to help you out. Some honorable mentions for getting rid of the fear. You need to find a good mentor who has had years of experience and can point you in the direction of some of these trades. Because if you have a great mentor who knows what he's doing, he or her, whatever, if they know what they're doing, they are going to help you out, and they are going to make sure that you don't make some of these big beginner mistakes. Another one is make sure you understand your trading platform. If you don't understand the platform that you're executing on, then you're obviously going to be fearful when you enter a trade, because we've had instances where people get into trades and they don't even know how to get out of it because they don't know their platform. This should be a position you never need to find yourself in if you just put in some outside work and some outside effort outside of market hours. So I hope this helped you guys out, and if it did, make sure you drop a comment, drop a like, and subscribe, and we will catch you on the next one. Peace.